How do you see the markets playing out for the rest of the year and also into 2023?
Thanks. Well, so look, I think for the remainder of this year, I think there is potential for a bit of a technical rally. You know, we know that around the midterm elections, you typically do get a bit of an upturn where the market rallies for the next 12 months. That is the standard action for markets historically. Now, we think that could happen because sentiment has been so negative. But as you get into 2023, and in line, certainly what you've heard from Goldman Sachs there, is that we are expecting earnings to take a bit of a drop back. Margin pressures, as they said, to coming really to the forefront. And then we are expecting recession in the US from the second quarter. So that will drag down earnings growth and then put that renewed downward pressure on equity markets through next year.
Yeah, certainly a lot of pressure on markets in general right now. So another thing we have to talk to you about is Jay Powell's commentary from last week saying that rates could go higher than previously expected. How does that change your view of portfolio management? For a little bit now, a couple of weeks ago, we've been talking about the 60-40 portfolio coming back. Does his commentary change that at all?
So I think we've had a slightly more negative view of the overall, the broad market outlook for a while. So we have expected US rates to go a little bit higher than certainly what the market had been anticipating. And certainly for us, to see Fed funds rate above 5% would not be surprising at all. So from that perspective, not much has changed. We do think this is the time to have a really defensive portfolio. You know, of course, you have exposure to equities and fixed income, but within both of those, it's really time to be looking defensive and quality as we get into next year, where the macroeconomic challenges really start to build up. And then at the same time, looking beyond that traditional 60-40, so looking beyond equities, looking beyond fixed income, and really focusing more on the alternative space, especially real assets, which will typically do well in this low growth, high inflation environment that we are expecting to persist through next year.
Interesting. So are there certain sectors that you're really keying in on to be defensive, as you say?
Well, yes. So within sectors as well, it's really important to start looking at which of the companies that you're looking at. You know, do they have margin resilience? Can they continue with pricing power as things get more and more difficult through next year? So we continue to like energy. But actually, this is really more of a kind of a mid versus large cap play. So looking at the global environment and saying, which countries do we think are going to perform better? So from that perspective, we do think that although the US is challenged, we think the US is going to outperform the others. So from that perspective, you want to be looking a little bit more domestic. And that plays into the mid-cap story, certainly over the large-cap story, which has got that greater exposure to outside of the US into kind of emerging markets in Europe. So we're looking at quality, looking at defense, and trying to really play the story sector by sector, and certainly cap size by cap size, and saying which bits are going to be the most resilient as we go into 2023.
All right, elephant in the room, the midterm elections that happen tomorrow. How big of an impact do you see those having on the markets?
So I think inevitably what we've seen time and time again over the years is that it does have a bit of a short-term impact, right? Typically that clearing up of uncertainty that has been weighing on markets, weighing on investors for several months in the run-up to the midterms, once they're cleared up, the market certainly likes certainty, as we know, and then it starts to rally. Now, we have to remember that in this situation this year, though, we have much, much bigger issues facing the market. That's inflation, rising interest rates, and potential recession in 2023. So I think there could be a bit of a short-term bounce through the end of the year. But then as we get into 2023, those bigger issues really have to come back to the surface. And we do expect that would weigh on markets and push them back down again.